Hey guys, welcome to another video where we are learning about stock markets. In this video, we are going to learn about theories. The first theory that we are going to talk about is the Fibonacci retracement theory. What is Fibonacci? So the Fibonacci numbers or the Fibonacci sequence goes like this. How do you find out the Fibonacci sequence? You start with 0, then 1, then 0 plus 1 will give you 1. 1 plus 1 will give you 2, 2 plus 1 will give you 3, 3 plus 2 will give you 5, 5 plus 3 will give you 8, 8 plus 5 will give you 13, and so on, right? And obviously it tends till infinity. Now, if you divide any number by the previous number, for example, if you divide 610 by 377, you will get 1.618. If you divide 377 by 233, you will get again 1.618. So if you divide any number with its previous number, you will get approximately 1.618, except the first 3 or 4 numbers here. Similarly, if you divide 377 by 610, you will get 0.618 or 61.8. And the consistency remains similar to all the numbers. That is, if you divide 233 by 377, you will get 61.8. If you divide 144 by 233, you will get 61.8. Similar consistency would follow if you divide a number by 2 places higher. That is, if you divide 55 by 144, you will get 38.2. If you divide 144 by 377, you will get 38.2. Similar consistency would go on if you divide 34 by 144, you will get 23.6, or 144 by 610, you will get 23.6. You can see the Fibonacci theory in some or the other form in nature, probably the humans or animals or flower petals, or there's Fibonacci theory everywhere in the universe. But your question would be, how does this relate to the stock market, right? Suppose there is a stock which rallied up very quickly to a particular level, and you wanted to buy that share, and you do not know when to enter. Then Fibonacci retracement helps you. How? Let me show it to you. Let's go to TradingView. I remember TCS shooting up quite quickly because of its results. So let's go to TCS. Go to the full featured chart. Okay, this is the TCS chart. You click here and you select Fib retracement. And how do you place the Fib retracement? You select a time frame and you select the lowest point and the highest point, right? Now from the highest point, you start drawing till the lowest point, right? We have drawn this. Let's just extend this. Okay. Now if you see here, the price started rallying up from this point, right? And it went up till here, right? Now if you see, it went up till this point, and these are the Fibonacci numbers. That is 23%, 38%, 61%. This is the Fibonacci numbers, all right? So how do you consider this? You consider every point as a support system. So if it breaks the first support, if it's trading in this range and it breaks the first support, it will go till the next support. If it breaks the next support, it will go till the next support. Now if you see, if suppose you missed a trade here, the trade that rallied up till here, and you can see a good rejection at this point, and it broke the support here, the price would at least come till this point, because this is a support. So suppose you took a trade here, the price went till here, and it again broke the support, it went till here. So you could have booked a trade from this point till this point, and as you see, this 0.5 level worked as a support level, and the stock did not go below this. So this is how the Fibonacci retracement works, right? Again, Fibonacci retracement should be considered as an indicator, and you do not trade on the basis of just indicators. So always look for patterns first. So we have discussed about the Fibonacci retracement. The other theory would be the DOW theory. DOW theory is nothing but your price patterns. Last is the support becomes resistance and resistance becomes support. This is pretty obvious, and I'm not sure if I told you this in the support and resistance video. So let me just tell you in this video. Let's just remove this. Now let's take this point, this zone where it starts from here till here. This is the support zone, right? This is the resistance zone. Now if you see here, the stock was hesitant to break this zone. This was the resistance zone, and then it fell, right? And then it started rising again. And one point, it came to a point where it finally decided to break that resistance. Alright. Now once it broke that resistance, you can see this became a support. Right? So whenever the price wanted to come down, this level did not let it go down. So you can see this resistance became the support. And similarly, if the stock falls down below the support level and it wants to come up again, that support level would become a resistance for it now. So every time it breaks a support, that support would become a resistance. Every time it breaks a resistance, that resistance would become your next support. This is not exactly a theory, but this is something that you should know. So with this, we'll come to the end of this video. Thank you for watching. I'll come back with more information on stock market. Till then, take care. Cheers. Bye.